Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well. If you're new here, every single Friday I break down the latest news and hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. Now in today's episode, we have a ton of awesome stuff to talk about, including what's going on with Bitcoin today, Ethereum, and some Ethereum projects like ERC20s. We have a little bit of stuff about ChainLink, a bunch of Cardano, and a ton more, so stick around so you don't miss any of that. Now, like we do on this show every single week, let's kick it off with questions from the community on YouTube and Twitter. So I will head over to the good old iPad and get started with those, but first, a sip of coffee. Now, if you want one of your questions answered, leave them in the comments down below or tweet me at Hashoshi4. And if you would be so inclined, please do subscribe to the channel and hit that little bell notification button so you can get a heads up whenever new content like this hits the interwebs. Oh, and by the way, last episode I asked people to guess another SpongeBob episode. The winner of that giveaway is LMAO, pretty cool name. I'll link that up here on the screen. Thank you and congratulations. I've already reached out to you to get your Bitcoin address to deliver the winnings. And make sure you guys stay tuned during these videos because I mix in some guess that cartoon episode all the time. Cool, first question. S. Bell asks, what's your opinion on the enterprise blockchain narrative? Via Ethereum's baseline protocol, UBT and Link seem to be taking this very seriously. I think this narrative will feature massively in the next crypto bull cycle. Yeah, I agree. The reality is that enterprise technology is always kind of chasing the latest and greatest, the cutting edge or the bleeding edge as we call it in industry. And ultimately what this means is that as enterprise tech catches up and keeps spending their investment dollars in technology like blockchain, technology like machine learning, it's going to end up like cloud was 10 years ago, where it was brand new. Everyone thought it was this mythical thing and it didn't make sense. It was too expensive, all this thing. And then it becomes the same ubiquitous technology that appears in everyone's stack across the world. So I think there were businesses that were doing this more early on, and that was, businesses in financial services, etc. And when they tested it out, it really wasn't ready. But now there's so many more tools. The protocols have improved regardless of what people want to say about them. And there's just a lot more options. Now, I think services like Unibright, services like, I guess you could even call the Ethereum Enterprise Alliance like in whole or in totality a service that helps enterprises get adoption blockchain-wise. It's all about making it easier and cheaper and more efficient to adopt blockchain. So I think it's going to be huge, and I think the narrative is totally fine. Businesses are not all built the same way. Not all blockchains are built the same way. There will be little niches where they fit in. Some will go public blockchains, some will go pseudo-public, some will go private, and that's totally fine. All have value depending on the use case. So thank you for your question. Alex Pohl asks, if Bitcoin ever reaches 100K and the transaction fees are roughly 500 per transaction, is this problematic for Bitcoin? The answer is yes. If people are spending $500 in transaction fees, then that's a problem. However, transaction fees in Bitcoin kind of go this way. Essentially, they are charged based on the size in bits or bytes for the transaction. So the max space in a block is 1 megabyte. That's prime real estate. You're going to want, obviously, to make your transaction size as small as possible. Things like segregated witness or SegWit really help with that, making transaction sizes smaller and subsequently fees smaller. The same thing can be said for Schnorr signatures. People can start bundling UTXOs and bundling transactions using a Schnorr signature and sending in one transaction to minimize fees. I think we're going to see that happening. Secondarily, though, I think it's really important to note that it's also about congestion on the network. So obviously, we're going to have to start pulling levers to make the Bitcoin blockchain on-chain more scalable. People hate that. People think that it's crazy, that it's perfect, and it's perfect the way it is. The reality is there are a lot of mechanisms that can be done with a soft fork, not a hard fork, to make the blockchain more effective and more efficient. And I'm not talking about making these stupid, massive block sizes. So I'll get off my soapbox on that topic. But yes, I think if these transaction fees get super high, then we're going to have a problem. But in reality, there are ways to mitigate. And I think we will end up doing that as this fee thing becomes a problem. So hopefully that answers your question. If you have a follow-up, feel free to leave it down in the comments below. Thank you, Alex, for your question. Troy Goss asks, what's happening with Enigma? Are they a part of DeFi? Now, I will be candid with you. I did not take these questions and research them. I usually answer these completely off the cuff. So with Enigma, I didn't do any other research, but I actually spoke to them a year ago, and I was working on a project that needed private transactions and private execution environments. And so one thing that Enigma was working on was allowing you to privately execute your smart contract logic in sort of like a trusted computing environment away from everyone else. Because one of the things that people don't realize is that not only is your transactional data public on the Ethereum blockchain, for example, so is the execution of your smart contract logic. So if someone knows your address, your addresses, someone knows what your key signatures look like, all this sort of thing. If people know that, then they can figure out what your transactions are doing, how your data is being, calculated and crunched within a smart contract, so on and so forth. Everything's publicly executed. It's called a world computer for that reason. So Enigma was trying to set up their network rather, or their protocol, I guess you could call it, to allow for privacy across the stack, but still allowing you to use blockchain and still take the benefits of it. So I think they're probably going to step into the world of DeFi, but I actually think that they have bigger fish to fry in terms of getting their privacy stuff sorted out, because that was their original use case. If they've pivoted and I just don't know about it, then my apologies, and anyone who knows Enigma very well can let me know down in the comments below if I am incorrect. So that's the best I've got on that one. Thank you for your question. All right, I have no idea how to say this name, but I'm going to just try it. Virub. Hopefully that's right. Prediction of BTC in 2025. Well, first and foremost, we're going to have another halving, so I think that's going to be pretty insane. That halving is going to be a significant one because it's going to probably be the first time in history where Bitcoin's price has far outstripped the former all-time highs that we've had. So there's no indication of whether or not halving is going to, work the way we think it's going to work in terms of price movement this time around, because this is the first time with a financial crisis that we've seen. But if by 2025 the state of the economy is different than it is today, it'll be very, very, very interesting to see what happens. So that's going to be interesting. I also think we're going to see more people starting to realize what Bitcoin means and what it's all about. I think from an adoption perspective, we're going to be leaps and bounds ahead of where we are. And I know you're probably saying, what's the price going to be? And the reality is that my guess is just as good as me closing my eyes or taking off my glasses, because it's just about the same thing. I'm blind, and throwing a dart at a board that has a bunch of prices. I have no idea. But if I had to make an off the cuff guess, 2025, I think we could very well be in the 50K range. I still don't think we're going to 100K like tomorrow. I think long term, fair, totally fair. But reality, I don't know when that's going to happen, and I don't think it's going to be as fast as people think it is. Happy to be proven wrong. More than happy. So thank you for your question. Hopefully that gives you just enough, but I like to be withholding with my Bitcoin predictions. All right, CC asks, nice video, man. Thanks. Question, how do you see Bitcoin after two halvings? Don't you think it'll be less profitable for people to mine? Do you think Bitcoin will go obsolete due to energy it wastes? And I don't see Bitcoin going proof of stake. My thoughts. Okay, there's a lot to unpack here. After two halvings, we already know for a fact now, because we've been through two halvings already, 2012 and 2016, that right now we have a Bitcoin that has traditionally gone to new all-time highs after each halving. That's reality. We've also seen Bitcoin get more and more attention and more users and holders after every halving, because it quite frankly is an event that garners interest. We've also seen a lot of times where miners have started to flee because of this halving event. So I think the third one, this upcoming halving in May, in a couple of weeks, is going to be significant though, because it's the first one that we've had during a financial crisis. Bitcoin came out of a financial crisis, but on the way back up. So it'll be interesting to see what happens when we're not in a period of expansion economically. Bitcoin, I don't think will go obsolete because it is pretty much in a class of its own. It is not a network like Ethereum. They are not even close to the same. So when people compare them and try and say, I like Ethereum and I don't like Bitcoin, vice versa, good for you. It's not even close to the same. So no, Bitcoin will not go proof of stake. It doesn't make sense for this network, and it's just not something that I think the core will ever do. I also think that it doesn't fit the use case. Proof of stake makes a lot of sense if you have a bunch of repetitive transactions for smart contracts, ERC20s, transacting big, fat transactions with a lot of data in them, like ERC721s, for example. That's when proof of stake makes sense. For this, it really doesn't. And quite frankly, proof of stake, I don't think they can make a provably secure model because of how many holders of Bitcoin are whales, right? And how mining has been designed for so long. It's going to be tough to do that, and I doubt that it will ever happen. So no, I don't think Bitcoin will be obsolete, and quite frankly, the electricity that it requires is not as catastrophic as people might think. There are plenty of businesses that use significantly more energy on a year-over-year basis than, quite frankly, Bitcoin does. So we shall see, but no, I don't think it's going obsolete. Thank you for your question, CC. Superstars Vlog asks, okay, I know what mining is, but what's in it for buyers? Does it drop the price in half? Who is the Bitcoin split with if miners are taking less of it? Are buyers now getting more and miners getting less? So this is about the halving, and this is a great question because it talks about fundamentals for the halving. So the first question, what's in it for the buyers during mining and halving? The price does not drop in half. When you're talking about a halving, it's having the reward that the miners get. Now, one of the key value drivers for Bitcoin is scarcity. It's how difficult it is to obtain. It's difficult to mine. It costs a lot of money to mine, and that's what makes the network secure, because miners are constantly spending and spending and spending and spending and expending resources to mine Bitcoins. And the only way new Bitcoin is created is through this work, hence proof of work. Because of this, when you cut the reward in half and you keep the work relatively static, this means that Bitcoin is now more valuable because it's harder to get. Now, miners do often leave because it's less profitable for them up front. But as that demand curve starts to catch up, because Bitcoin is now harder to get, the price is sort of artificially driven upwards, then miners come back, because as long as the price starts to approach, it's not even all the way, like, doesn't have to be doubled. The price can go, as long as the price starts to move upwards in trajectory and mining difficulty starts to come down a little bit, the equilibrium point for miners to come back in at profitable levels is actually not as high as people think. So no, the price does not get cut in half. The price also doesn't double. People think it doubles or it has to double. That's actually not the case. And he said, who is the Bitcoin split with if miners are taking less? No one's split. It's protocol based. Buyers don't get any more Bitcoin. The reward that miners get, or the rate of inflation basically in the network, is just cut in half at the protocol level. So it's just a cut in half for the reward that miners get every time they mine a block. So really, that's all there is to it. So great questions. I think these are fundamental things about the halving people need to know. Giorgio Medici asks, bro, great vids. Thank you very much. Question, if I buy ETH now, will I also get the 2.0 token when it's up and running just for holding ETH 1.0? I love this question because people actually don't know this, and this is something that I didn't know either until I really read into the spec about Ethereum 2.0. At least right now, as it currently stands, and this might change, if you have Ether on the 1.0 proof of work chain, the one we have today, when the Ethereum 2.0 network comes up, which will be a totally separate network, completely different network, you will then be able to migrate your Ether from the 1.0 proof of work chain over to the 2.0 chain where proof of stake is relevant. That's a one-way ticket. You move your Ether from one place to another, one chain to another, then it's there for good, because they don't want you going back to the proof of work chain. Later, the proof of work chain is going to be integrated as a shard or as an element in the network that is Ethereum 2.0, but that's not going to happen right away. They're going to have like a bridge to move Ether over so people can start staking. It's not going to be like a hard fork where you have a forked network and you automatically have coins in both places. They want this to be a clean move from 1.0 to 2.0, and so they want people to move in one direction, not backwards. So that should answer your question. There will be a tool that they have to put in your Ether addresses and to sign transactions to move things from 1.0 to 2.0. That's forthcoming. It'll be here as soon as 2.0 is ready. Thank you for your question. All right, RCL asks, Hashoshi, thanks for the great content as always. Thank you very much, as always. On his question, do you think I'm crazy to hold more ADA than ETH? I don't think you're crazy. I think that it's whatever you believe in more, and that's totally fair. Everyone is entitled to like one project over another. In terms of dollar value, I would say I probably have more Ether than I do ADA, but that doesn't mean that I don't believe in ADA. So it really depends on your situation, whatever you like more. I'll tell you, ADA is a lot more accessible right now to own a significant amount by volume than it is for Ether, because Ether is hovering at around $200. So honestly, you're not crazy. No one's crazy for picking the project that they like, because it is a personal decision and no one should tell you that you're nuts or stupid for making that decision. So that's my thoughts on that one. Thank you for your question. Richard Churchwell asks, what is the difference between a hard wallet and a vault? Can you keep different kinds of crypto on one wallet, or should you use separate hard wallets for each? I did see you can keep different crypto on a BC vault. Thanks for it. Any info or advice from educated minds? Thank you for this question. There is no difference between a hardware wallet and a vault. These terms are sort of used interchangeably, often depending on what product you're buying. A BC vault is a hardware wallet. A Ledger Nano X hardware wallet is also technically a hard vault. So it's all interchangeable. What you're looking for in a hardware wallet is something that is not internet connected, so something that does not connect out to Wi-Fi, something that has a secure element, which is a chip that is able to store secrets, in this case private keys, securely on board in a chip that is tamper resistant, not tamper proof. Nothing is fully tamper proof. And something that has some sort of secure hardware, meaning if someone tries to pull it apart or attack it from a hardware basis, that it has some security measures in place to protect you from that. That's what you're really looking for. You don't need to use separate hardware wallets for your crypto. I personally have multiple wallets, and I split up my crypto across multiple wallets of different types because I'm a little crazy and I just like to split it up. It's just a de-risking factor for me, but it's really not necessary. Honestly, if you have one wallet and then one to back up your keys in the event that that other wallet is busted or lost or whatever, then I think you're in good shape. So thank you for your question, Richard. And I think we are good with the questions. I know there were a lot of questions this time, but because there was no crypto over coffee last week because I was sick and I'm feeling much better now, I wanted to get to as many questions as possible, and I answered kind of double time this time around. So let's dive into the first segment of the day, which is crypto Mythbusters or chain breakers or whatever. If you guys have an idea of what to call this segment, please leave it in the comments down below. Basically, I want to go and dispel myths about cryptocurrency and technology every week and explain to you the realities of what these myths are all about. So with that, let's get started. Make sure you let me know what name this thing should be called in the comments below. Now, today I want to talk about the whole blockchain, not Bitcoin thing that you hear from so many big names in established industries. What this phraseology really implies is that businesses should use blockchain but discount Bitcoin and its public blockchain counterparts. Now, not every business or organization can or should be on a public chain. That is a simple fact. However, what those who use this mythical statement fail to realize is that these words are a total and complete paradoxical mess. Without Bitcoin, there is no blockchain as we know it. First of all, Bitcoin is a blockchain, and Bitcoin is also a damn good blockchain for that matter, one that all enterprises should seek to replicate for its integrity and security that puts most enterprise systems to shame. Secondarily, the words blockchain, not Bitcoin lead most to believe that simply having a blockchain creates value, and that all blockchains are created equal, and this is the most criminal consequence of all. A blockchain is a tool with specific uses that it thrives in, and implementations that do different things depending on what blockchain you're using. But blockchain is also not a seasoning that you just sprinkle onto every problem, or that you invest in for the sake of just having a blockchain and using the word. Remember those facts if you remember nothing else. The phrase should go blockchain, but with purpose, because at least that covers the basis of what you need to be thinking about. Choose the right protocol for the job, start with a problem and not with a blockchain, and then build. So let's jump right into the world of Cardano. I've been following their dev updates for a while now to see what's been going on with Shelley, as well as keeping a close eye on their GitHub repositories for code changes. Now, I just saw some news that Cardano this past week saw its first test Genesis block for the release candidate Shelley implementation, meaning in a closed environment, the first Shelley block was created. This is great news to hear, considering we are weeks away from the official Haskell implementation testnet that's public, that should push us through to mainnet Shelley, which by my estimate, and obviously this is not backed by anyone at Cardano whatsoever, I think we will see mainnet Shelley by June or July, so towards the end of June, early July. The Genesis block in a closed environment marks the start of internal testing for the final versions of Shelley code, barring updates and fixes that come out of these tests. So well done to the Cardano team on that awesome milestone. Speaking of Cardano, though, I recently did an interview with Kaizen Crypto, who runs a stake pool in the Shelley incentivized testnet and an awesome YouTube channel. I wanted to play a snippet from that interview that I think is pretty impactful and educational, and I would also urge you to go check out Kaizen's YouTube channel, subscribe to this guy. He's a top quality dude who's making good content about Cardano, so I'll link his channel down below. So go ahead and check this snippet out, and I'll be here when you get back.
So wanted to know your thoughts. Do you feel like, when we do start to see smart contracts like Plutus, Marlowe, is there, because if you look at Ethereum, the most dApps by far.
For sure.
Do you see Cardano kind of stepping into that market share at all when it comes to dApps?
I do. And I talked about it a little bit on my Friday video last week. And that is, I do think that there's room in the industry. And it goes down to simply language preference is the first place where I think people are going to see some movement. There are a lot of developers out there that don't want to touch Solidity because it's a minefield. Like, it's a huge pain in the ass to use from the perspective of security and from the perspective of having a lot of room to mess up really badly if you don't have experience. And so I think there are a lot of developers who are not super comfortable building production stuff with Solidity yet. It keeps me up at night all the time writing contracts, and I do it all the time. But I think then a bunch of developers that work on really data-oriented use cases and that work on financial systems, they already use Haskell. So what are they going to try and do? They're going to take Haskell, which is basically what drives Plutus, and write those same types of apps, but in a blockchain environment. So I think we'll see people who are very language preferenced jump in, and they all think differently. Someone who's JavaScript focused, that kind of translates over to Solidity, or C focused, they probably build different stuff and are used to different stuff than someone who uses Haskell or OCaml, for example. So I think there's plenty of space. I really do.
Nice. Yeah, that's I really appreciate that insight, because I know, coming from a programming background, it kind of like you got your boots on the ground basically.
And it's nascent. I will say, even every time I build something, I mess something else up and I figure out why I messed it up. And then even things that I built 3 months ago or worked on 3 months ago and didn't finish, I'll go back and be like, what was I thinking? Because the pace at which this stuff is moving is so fast. And the same thing is going to happen with Cardano. As soon as Goguen hits, it's going to be rapid iteration on the language and virtual machine and all that stuff. And we'll finally have a Cardano ecosystem that's like revving on all cylinders. All right, welcome back. Let's continue on to some cool ERC20 token news. One of the trickiest things about ERC20 tokens, and the vast majority of them, is that they're hard to get access to outside of an ICO. Exchanges rarely list a majority of these tokens, and even popular ones like Unibright token are not really readily available all over the place. Now, the Transact team, who are in the business of fiat and crypto on and off ramps, just released a tool that allows fiat to ERC20 access for the vast majority of ERC20s on the Ethereum network. This means that with euros, British pounds, and Indian rupees, users can take fiat and use it to purchase ERC20 tokens like UBT, Link, Maker, BAT, PAX, and a bunch more using Transact's new tool. This is an awesome achievement, and it's significant because it brings inevitably more access to tokens that just aren't on exchanges or really aren't accessible to people today. Oh, coffee break. It's really hard to come back to these videos after like 7 or 10 days off of recording. Oh, that's good coffee. Also, I've got the BTC mug going today. I got this at Consensus last year, thanks to the Gemini folks. Very nice mug. In other news, for those of you who play Animal Crossing New Horizons like me, I know I'm a total nerd, you got a notification last week, I think, that the bank in your game was reducing interest rates for your stored cash, or they're called bells, from 5% to 0.5%, a complete gouging of interest rates. Now, if you are playing this game, comment your island name down below. I'm actually really curious. Now, you're probably wondering, whoa, hold on a second. How is this relevant? Let me explain this. We're facing very similar situations today in the real world, where banks are pulling the rug out of high-yield savings accounts and other interest products. This reinforces the case for cryptocurrency in the real world, where interest rates and products are not governed by ravenous, profit-hungry machines. However, even more impactful is the fact that in the game now, in Animal Crossing, you're now seeing users flock to more risky means to make money, like playing the turnip stock market where you just flip a speculative asset trying to make a profit. Because they don't have access to this easy 5% monthly earning, they're now moving to speculative assets. This same phenomenon is happening in real life. As the safe, stable earning products have been going away and all the safety people are used to is going away, people are moving to assets like crypto, like gold, like silver, and in some cases stocks, which are all speculative assets. This reinforces the trend that at times of uncertainty, people do naturally look for alternative ways to make money and secure their nest egg. Pretty fascinating to see this happen in a game, just like it does in real life. Psychology is a really interesting concept. Well, you've stuck around this long, and that means you probably want to hear about Bitcoin, and I know all of this all too well. So we've got a healthy dose coming your way right now. First and foremost, the last week has been quite kind to us Bitcoin holders overall, with a nice ride up to over $9,000 per Bitcoin. However, as of today, it seems like it's running out of steam a little bit. And knowing my luck, after I film this and post it, it'll either go up or down just another $1,000 to prove me wrong no matter what I say. That's what happens. Now, I think the price movement in the positive direction is the result of a couple of different things. Number one, I think this is a semi-manipulated move by exchanges and whales looking to find a nice profitable exit before the inevitable halving volatility. Number two, I think this is a speculative run on Bitcoin because of the halving and all the empty promises that have been catching immense hype online about the halving driving Bitcoin to 100K and other insane numbers like that. I'm sorry to be that guy, but let's just have a little reality check here on camera together. Even if you use previous halvings as a guide, we won't see instantaneous rocket ships to all-time highs like tomorrow after not tomorrow, but the day after the halving. I just don't think it's going to happen. It'll be a slow burn over a year or more with several big jumps trickled in that time period. Now, there is a reason to believe that this halving is different because this is the first halving to occur during a bona fide financial crisis and outside of a period of expansion. This might make our historical halving data completely useless in gauging how this halving will play out. So one thing I know for absolute certainty is that this is no time to bet the farm on one asset. Bitcoin could very well see a new all-time high this year, but it just as well could trade sideways or roll right back down in price as miners jump ship after the halving. You never know. So please don't listen to the moon brains telling you 100K is imminent as if they have any idea or any indication in the positive direction. They haven't the faintest idea where the Bitcoin price is going, and honestly, neither do I. If I were a betting man, I'd say we see Bitcoin trade positively up to the halving with a drop the week before it. Then we see volatility galore following the halving, and then over a 2-year span into 2022, we see positive price movement with several drops and volatility in between there as we move to all-time highs. Now, this is completely arbitrary based on fundamental market intuition, and not one line, candlestick, chart, or anything was looked at or referenced in this prediction from my perspective. So take it with a grain of salt. Don't make a trade based on my advice. I'm not a financial expert, this isn't financial advice, and I would have made a better guess, or just as accurate, blindfolded with a dart in my hand. All right, folks, it's time for everyone's favorite segment, 404 Logic Not Found. For those who are as of yet uninitiated in this little firecracker of a segment, I highlight the notable tech-related fails or otherwise stupid moves in the world that need to get some attention. This segment is fun, and if you like fun, you should probably, with tender loving care, press that like button and show it some love. I'm such a loser, sorry. But, I just think this whole thing is funny. 404 Logic Not Found is a great segment, so let's go. As you probably know by now, I talk about cybersecurity quite a lot, and I talk about how to protect yourself on this channel from the doom and gloom that is the cybersecurity landscape these days. So here's my latest and greatest advice. Cancel your Zoom subscription. Yes, I said it. I canceled mine. This was the last straw. I finally just bit the bullet. I'd rather not do video calls than be on Zoom right now. Now, in a recently released report, I read about the ins and outs of the 500,000, yes, 500,000 passwords that were stolen from Zoom that pertain to its users' accounts. Yes, you heard me correctly, 500,000 passwords that often sit along with usernames and personal meeting IDs to make it even worse. Basically, hackers were able to take stolen user databases from the dark web, not from Zoom, from other places, and then use an automated tool to ping the Zoom login service to check if these logins were valid. They then take these valid logins, the one that come back positively, collect them into a new validated database of users that can authenticate on Zoom that's now up for sale as well. I mean, this is fundamental stuff. I mean, now you know why I tell you to change your passwords all the time, to use different passwords for each site. Well, it's because you have stolen credential databases from 2013, 7 years ago, that still contain passwords and username combos that are used still by the same people all over the web. It's very likely that from 2013 and 2015 databases that were hacked, hackers were able to find the exact email and password combination for a ton of users on Zoom without any effort whatsoever. And the fact of the matter is these databases, because they're so old, are probably free. So it might not even cost the hacker anything to get them. Now, I could say 404 logic not found for anyone who hasn't changed their password after a data breach, but you know what? I'll give you a free pass just this once, because in reality, this isn't your fault. The real fail here is Zoom not requiring users to change their passwords after the very first whiff of password stuffing. At least then, they could have stopped users from having breachable accounts and stopped the collection of login validations right from the start, or at least the brunt of it. Top to bottom, this has been the worst security and privacy performance from a big tech company that I can remember in recent years. Like in my brain, I cannot think of one that's been worse. 404, logic not found. And you know what? My money will also no longer be found in Zoom's accounts receivable, that's for sure. Honestly, while the passwords were not directly stolen from Zoom from their own database, their API was used to validate a brand new database of valid logins. So if you have Zoom and you don't want to cancel, change your password, just please do it. In other tech news that's not actually a fail, I read about a new AI-driven robot called Flippy that is intended to replace the manual labor at food service joints, especially flipping burgers and shaking out fries. This new robot uses machine learning to continuously become more efficient at the task it is given within the kitchen. And it is OSHA compliant, easily cleanable, and it is not cost prohibitive for franchises to invest in. With the whole situation going on right now where food service is at a standstill because their employees are human and subsequently infectable, well, presents an opportunity for robots to come and really replace people in these contexts. This is a product to watch. I bet this gets major adoption after this whole mess starts to resolve and restaurants get back to normal operations. They're going to be looking to remove some of the risk in their business and to cut costs. And automation is going to take out a lot of these types of jobs. The manual labor, that's just the reality. Now, I'm not saying this is doom and gloom and everything's going to be bad. Humans are good at a lot of things. Manual labor, sure, but not really. Humans are good at thinking, making emotional decisions, being intuitive. There are other jobs out there, so automation is not going to destroy the entire world. Moving on. Now, a little ChainLink news to sprinkle on and put a little cherry on top of this packed episode. ChainLink just announced that they will be partnering with Casper Labs and Tezos. Okay, this is too much. A new proof-of-stake blockchain in Casper Labs that has a heck of a tech stack, and also Tezos, who has a huge community and is trying to push their smart contracts into something more usable and that gets used more often. ChainLink is now going to be the primary off-chain data oracle provider for both. I mean, yet again, ChainLink is staking claim, proof of stake pun intended, to some of the most hotly anticipated networks out there and ones with the most people on it. Now, in my opinion, Casper Labs and their innovative proof of stake mechanism their cutting edge architecture, and some of the significant hype that's growing around their project is a great place for ChainLink to start integrating from the ground up because everything's not built yet. This means that not only will ChainLink be the Oracle provider like it is on Ethereum, it will also be an integral part of Casper Labs' native architecture and contract structure. So this is another huge partnership that I'm really stoked about. And with Tezos, the rabid community and the ability to now use ChainLink as the primary Oracle provider for smart contracts within Tezos is also huge. So if you've heard of Casper Labs, please let me know down in the comments below. I'm trying to gauge interest on a standalone video about Casper Labs and their blockchain project. So please do let me know if that's something that you're interested in. Now, as always, folks, I'll link up some awesome tech-related content here if you have time to stick around. Somewhere on the screen, I always get confused where I'm at. So thank you in advance if you do have time to stick around. But until next time, have a great weekend, and I will see you next week. Cheers.